Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how, hopefully, to make just a little bit of money on the internet. Loaded up for discussion today, we have Venmo co-founder launching Jelly app with a meme coin, which sends to $200 million with a little bit of tweeting from Solana co-founder as well. We'll dive into what on earth happened there in just a little bit. We've got the SEI Foundation launching a $65 million DeSci venture fund, Sapien Capital. Interesting direction that the SEI Foundation is going in. We've got some interesting details to share on that when we dive in on that a little bit later today. And then also, finally, Trump Media launches fintech brand with partnership with Charles Schwab and Crypto Focus. Thought that was very interesting to hear the Trump conglomerate further tying themselves to crypto and making sure they're going to be well positioned for what I suspect is going to be a pro crypto, very much so, pro crypto presidency at this point in time. We've also got the latest on price action and crypto and NFTs, plus a general discussion on portfolio thoughts at the moment, how we're feeling, both from a personal perspective for me and Legendary today, who is here with me in the co-host seat, but when we're ready to get into it. But just a reminder, friends, that nothing that we say is financial advice. This market is very, very risky. So always proceed with caution and always use your own judgment. This is not financial advice. With that out of the way, Legendary, it is the 30th of January. It is a Thursday. How are you doing? How are you feeling?
Jim, I'm doing quite well, but you are instilling fear into some of our viewers and listeners. Oxy in the YouTube comments is saying, oh, B is bearish, quote unquote, a little bit of money, which you said in the intro section. It's like when Powell says good morning versus good afternoon. We need to read into this. Or when Buffett leaves with a briefcase in the morning and if he's holding it with his whole hand versus with his fingers. So, a subtle change in the intro might affect the market.
To be fair, like, yeah, I don't know. I was writing the news today, and it felt for the first time a bit quieter. Is that crazy? Like, there was a coin that ran to 200 mil, but there was only one. There was only one. It felt a little bit quieter in general. And like, look, I don't know 100% how these things go, but I feel because I write the news every single day, I do all the research myself. I feel like when stuff is hot, like I can feel it because every tweet that I'm scrolling through, the whole timeline when I'm scrolling through, it's just like the pulse is inside of me. The market is inside of me. And so I can kind of feel it. And I don't know, it felt a little bit off today. What is that? Is that just me, Legendary?
No, I know what you mean. I mean, volumes and everything look amazing, but I think honestly, I mean, we're going to get into it because we have a little bit of a segment on that, but I think we are heading into a very interesting weekend, but I'm going to hold on to that thought for a couple more minutes until we're there.
Okay. Nice little bit of suspense. I don't mind that at all. Right. Well, in the meantime, then, might as well get into the price action and the headlines to get people up to speed with what is going on, which, as you say, it's actually not quiet. But I think maybe because I missed the 200 mil runner. Well, actually, I got into it and then I got out of it, but with like minimal gain. I basically got right at the top, got like a little bit higher. I was like, I'm not sure how much it's going to go from 200 mil. Maybe that's my flatness at the moment. Okay, so let's start with the price action on the majors. We've got Bitcoin up a couple of percent to 105, ETH up a couple of percent to 3.2. ETH is at 3.2. Solana is up 4% to $240. Some notable other, I don't know if you consider them majors yet, but definitely one of the bigger bounces yesterday was Hyperliquid, up almost 14% back to $26. So that is one to note as well, one of the bigger movers. On the meme coin side of things, and Legendary, when we come to you a little bit later, maybe talk through the meeting that happened yesterday and why people maybe, why things kind of bounced as a consequence of that meeting yesterday. But getting into the meme coin side of things, we've got Doge up 1% at 33 cents. Pepe's up a couple of percent. Trump's down another percent to $27. I'm looking around here for anything impressive. WIF is down 10%. People were reporting it as a huge update yesterday, but it's been falling in general, and it kind of corrected, but now down another 10. SPX, Murad's coin, up 13. Fartcoin is back above $1 at 117. Pengu down another 5%, down almost 40% in the last 7 days now. Tough times for the Pengu. AI16Z up 17%, so maybe AI is a little bit stronger here. Toshi on base is up another 15%. Mog is down another couple of percent. AI XBT up 16%. So again, try and distinguishing this meme sector. Animal memes probably a bit harder hit here. AI memes up a bit, still down in general from like the last month or so. AI XBT is down a quarter from in the last 7 days, but at least up 16% today, whereas some of the other things are not coming back at all, it seems, at the moment. Okay, that's a little summary of that. Getting into the headlines themselves, we've got Venmo co-founder launching Jelly app with memecoin, which sends to $200 million, with Raj from Solana tweeting basically the idea that everyone's going to launch a meme coin. He said launching a token is like having a kid. You got to be ready, and nobody knows if you are better than you yourself. It's a serious commitment, not for the lighthearted, but everyone should do it eventually. I think we've got an interesting conversation to have around that a little bit later as part of the analysis. We've got the SEI Foundation launching a $65 million DeSci venture fund, Sapient Capital. That'll be interesting to break down and why they might be going in that direction. And then finally, big news coming out of the Trump family, the Trump conglomerate, Trump Media launching a fintech brand with partnership with Charles Schwab and a crypto focus. Seems like they are making every attempt to be well positioned to profit from every angle of a pro crypto presidency. So I think that'll be interesting to just get the details on, so we're up to speed there. That's the main headlines. Legendary, what's going on the NFT side?
Bit of a mixed bag, to be honest. We have Bored Apes being down 3%, 12.94 ETH, falling under the 13 ETH mark. On the other hand, Pudgies, which went as low as 10 point something ETH, actually had recovered to 13 ETH. Yesterday have dropped down a bit, but are managing, at least for now, to hold the 12.08 ETH floor, so being a bit above 12 ETH. Miladies, on the other hand, they had a nice move up. They are up 7.3% and well above the 5 ETH floor, sitting at 5.15 ETH. Doodles, a bit of a smaller move, but also on the green side, 4.52 ETH floor, up almost 3%. And Azuki's yet again sliding down a bit lower. It's only a 1.6% movement, but they are now at a 3.52 ETH floor. B, you are on mute.
Good stuff. Good stuff from the NFT side. Let's get into the rest of the Web3 roundup to keep you up to speed. We've got the Federal Reserve Chair Jerome Powell saying banks are perfectly able to serve crypto customers. That was reported by Bitcoin Magazine. Seems like there might be a movement to get banks able to hold your crypto for you. Trump's Bitcoin and crypto czar David Sachs says the administration is exploring a federal strategic Bitcoin reserve. He was asked about that in an interview, and he said the president has asked them to look into that issue. So definitely not like, guaranteed, nailed on, but that is what they are looking into. D3 announces $25 million Series A led by Paradigm. They're building the world's first domain-fi network, an innovative blockchain that unlocks new liquidity, innovation, and financial opportunities for the internet domain economy, together alongside major crypto communities. That's an interesting concept. Hyperliquid flips Ethereum in the amount of fees generated over the last 24 hours. I think we've been saying it for a while. Hype's fee generation. We talked about it on the show yesterday. These protocols that are doing serious numbers, they are buying back their token. They're generating a lot of fees. They're then using those proceeds to buy back the token. They are performing pretty strongly at the moment. We'll reflect on that further in a bit. Ethos Network launches, giving users the power to buy both trust and distrust markets on KOLs. This is an interesting launch. I know Bread Guy, also a host with us, not with us today though, is like partly involved in this, where you can basically long and short KOLs in terms of their trust. Like if you trust them a lot, there's a market that you can buy. If you don't trust them, then you can kind of short them. So interesting concept, trying to take this like reputation fi concept, SocialFi concept, a little bit deeper. The Rift token launched yesterday and ran straight to 300 mil, 200 to 300 mil before sell off to 60 mil. There's a bit of FUD around that because a lot of the Bored Ape community, I think, who had been in the heavy metal community, maybe like didn't get the allocation that they were expecting or weren't aware that the whole thing was taking place. So I think a little bit of FUD there around that. Pudgy Penguins announced a Pez partnership to bring Pengu to life with one of the largest candy brands in the world and join the Pez lineup alongside Pokemon, Disney, and others. This visual, which we're sharing on the screen, remember we're live on video on Twitter and on YouTube. Pretty sick. Looks really, really cool. Awesome integration of the penguins with the official Pez branding. Looks very, very cool. And then finally, Tyler Winklevoss says no MIT graduates will work at Gemini, whilst Gary Gensler has an association with the school. I noticed a couple of prominent crypto people suggesting that there should be a boycott on MIT while he is teaching there, because he's obviously gone to teach there now that he's no longer the chair of the SEC. And they're suggesting that, you know, no one in crypto should be supporting that hire. That's the Web3 Roundup Legendary. Before we get into the main headlines and a bigger discussion on our general market thoughts at the moment, anything catching your attention there?
Yeah, it's one of the most interesting roundups from the perspective that I basically want to talk to almost every headline, which we unfortunately can't do. I like the Pez news. Bit of a patriotic news for myself because Pez is originally an Austrian company. So
No way.
that I found pretty cool. On a more substantial note, I think Hyperliquid flipping ETH in volume is very, very relevant. It's something I did not expect to happen, or I did not expect to happen it that fast. So that has some implications also on how I think about my portfolio. And then on the product side, Ethos Network, the betting market on KOL's reputation, and Ethos per se is super interesting. I think Ethos was invite only until yesterday before that launched, and now it is open to everyone. And basically the idea is that you can, well, vouch for people, bet on the reputations of select creators. You can rate posts positively and negatively. And which is the cool thing about it, for those who don't know about Ethos, there is a Chrome extension that basically works as an overlay with X. So when you scroll posts and you come across someone that you don't know, you can see if they have an Ethos reputation, or if someone has said, yo, this is a grifter, or no, that's actually a very trustable person.
Interesting. It's obviously an interesting concept. My immediate thought goes to how those metrics can be gamed, how you can potentially be attacked. Like, is the wisdom of crowds always correct if certain people decide that they don't like you and they have their army of followers go to attack you on the network? I wonder what that does and how the systems are in place to deal with that. So that would be my open question. I haven't dived into it, although I'm very, very interested in the social advice scene in general. That's why I think Kaito, I was speaking to a prominent marketing team in the space yesterday, and they were saying, they were kind of like I was saying from our side, I think it's a game changer. I mean, fortunately for us, it's a game changer because it puts us in it presents us in a positive light, because we're all pretty high up, which is nice. However, even from the marketing side, they said like it gives us justifications for maybe sometimes going for traditionally smaller accounts, because it provides a level of insight that was not capable. It was not capable to see certain accounts' value beforehand, whereas this provides a bit of a deeper dive. And the classic explanation that was given was that traditionally everyone just gets attracted to the follower number. Like the headline follower number is always the thing that attracts people, whether or not people secretly know that it's botted, which we have never done in any way. It's always the thing that attracts people's attention. And so I'm very, very pro any protocols, applications, whether that's Kaito or Ethos or any in this arena that kind of sheds some light onto the positive actors in space who may not be as prominent, but start to receive some of the positivity based on their quality content over long periods of time. So very, very pro that.
I think the thing that Kaito did really well, and but I could also see, by the way, working together with Ethos to have the the reputational layer, and then to have the distribution or influence layer of Kaito, is the thing that Fantasy Top struggled with at the beginning was basically that high follower accounts got nerfed, but you have people with a very high follower account who are super relevant, and you apparently also have people with smaller follower accounts who are also relevant. And I feel like Kaito managed to find a good way to make the follower account irrelevant for that, because let me bring this up on screen real quick. If you look at the current 24-hour leaderboard, you will see, well, I myself am like ranked 27 or something with 40K followers, and you'll see people like Bread, people like Henry DeFi with 10K followers. You see big guys like Ansem with 670K followers. You even see someone with under 6K with 5.8K followers. So it feels like it goes all the range from a couple thousand to hundreds of thousands, even millions of followers, because Vitalik is on there quite frequently as well, and Vitalik has 5 to 6 million followers. So they managed to find this relevance measure without having to rely on follower count or having to boost nerf or somehow adjust for that, because it's just not a metric that matters in the way that they look at the at their Kaito score.
Yeah, very, very interesting stuff. And I think one of the realities is this has not only caught the attention of marketers, KOLs themselves, but protocols are absolutely desperate to be involved now. Like I think Movement Labs yesterday or the day before announced this whole program of incentives for people who are going to be yapping about movement. I'm aware of a number of other protocols who are like lined up, ready to have their data tracked and using that data as a way to try to find their super fans and best members of the community. So I think that'll be something to monitor going forward, and it's definitely going to be of interest to everyone as things move forward. Before we get into the main headlines, Legendary, I know you said that you were interested in a variety of things there, but the Hyperliquid stuff, I definitely wanted to touch in there because, I wouldn't necessarily say this is a major yet, but a lot of the main accounts are talking about Hyperliquid a lot. I wouldn't, ourselves included. I think you're in Hype as well. I think you have a position. I have a position as well, to fully disclose. But the key bit of information that seems to be cropping up, or the key idea that's been communicated and maybe part of the investment thesis at this point, has been fees. And like the news today, which I think people have been feeling for a little bit of time, is that they're just earning so much damn money. And like to flip Ethereum in fees generated in the last 24 hours, but frankly, whether it had literally flipped Ethereum or whether it was, almost there for a period of time, like it's been doing record numbers over and over again. We reported it 2 times last week. I think it was on back-to-back days last week. They did record volume in 2 days in a row. And it's just a huge signal to the market that the demand is there. One thing I wanted to, in addition to that, and I want to hear your thoughts in this in the second ledge. In fact, let's hear your thoughts first, because there's a specific tweet I want to show and maybe explain in what direction I think this is going. But what are your thoughts here?
Yeah, I think it's very significant. Just to put that a bit in context, so we have right now Hyperliquid, when I'm sharing this on screen from DeFi Llama, the fees dashboard, being in the 11th spot with 1.93 million fees in fees over the last 24 hours. Lido 2.5, 10th spot, then Photon 2.6 mil, and ETH in the 12th spot 1.8 mil, followed by Aave 1.6 mil. So it is operating in this bracket, which basically tells you 2 things. A, it sits above the traditional DeFi, above Aave, above Maker, above ETH. But B, it's still one basically, or like a good chunk of 40-50% off to be able to catch up with the likes of Photon. And I feel like that's a perfectly fair representation. Also, if you look, I looked a bit at the mindshare charts on Kaito as well, where you can see that it's also trending up there. And it could, if it continues the momentum, it could like move into the top 3 of mindshare, but it's obviously not there where memes are. So being placed between what ETH does and ETH plus ETH DeFi, just in terms of like mindshare and attention right now, and memes, and somewhere in the middle, I feel like that's a very fair representation, both from a mindshare and fees perspective. But it is a move that I did not expect to happen that fast.
Yeah, definitely a move being cooked up, as Rune Lord says in the comments. Rune Lord's good on Hyperliquid. If you want to follow someone who's like sharing Hyperliquid thoughts or Hyperliquid trades, I keep an eye on what he's saying on Hyperliquid. It says this is before Hype EVM and the dApps. Like, people are building out, right? This is going to be a chain. It's going to be a chain. There's people building out on it, and to that point, there's very significant people building out on it. I wanted to share this account, which it looks like Legendary. This happens a lot with me and you. Sometimes we're like in completely different universes. I'm following people and knowing about people that you don't know, and then the same goes both ways. But this is Shoku, who, from everything that I've read, is like deeply connected, very significant whale, and has been backing Hyperliquid for quite some time. Early into some of the best protocols, the cycle, like Athena and others. And here he's talking about talking to Bitcoin whales, and they're looking for the same thing: a better solution to trading Bitcoin on chain. And we are going to give them a damn good one. Hyperliquid, as you know, in normal fashion, to end the tweet with Hyperliquid is the way to do it. But I think there's going to be a way to trade Bitcoin on spot Bitcoin on Hyperliquid in some way, and I think that's the direction they're going to go. And I think there's some very significant people working towards building Hyperliquid out in a much bigger way. So definitely something to keep in mind, and thinking about how much volume they're doing already and all the stuff they're doing already. I don't know. It feels primed. It feels like in a very good spot. Some of the ways I've played Hyperliquid already is partly just trading all the time. Like, I flip between generating volume, because I think there's going to be a second airdrop, which I think will be very valuable given the value of the protocol. So sometimes I'm in and out, like buy at 21, sell at 25, because it's been stuck in that range for a while. Kind of leaning towards just holding now, but I can't promise that, so don't follow me into the trade necessarily. But like, when I'm looking at ETH, and this was a personal conversation we were having the other day, when I'm looking at ETH, being like, how many times do I need to just say it's at 3.1 and 3.2 for me to start diving into this stack and maybe reallocating to some other places? I actually did that for the first time the other day. I mean, I've done it in other ways before, but just taking a little sliver and putting that into the Hyperliquid ecosystem to play with, whether that's specifically to buy Hype spot, or whether it is to just go into the vault in Hyperliquid and earn 25% in the vault there, which is your kind of share in the revenues that the protocol is generating. Slowly, like maybe allocating a little bit more to the Hyperliquid ecosystem in general. Those are my thoughts, Ledge, but be curious to hear yours before we hit the main headlines.
Yeah, I think for Hyperliquid specifically, the vault that you mentioned, the HLP, the Hyper Liquidity Provider, that is one that I find very interesting to benchmark and take a look against. So I'm showing this on screen. This is the Hyper Liquidity Provider, the HLP vault, sitting currently at a 24% APR. This is obviously changing very, very frequently because it depends on trading volume. If there's a lot of people getting nuked because they get liquidated as the market is tanking, or people are converting and fleeing into stables, that gets a lot of volume going, increases the APY for the time being. And then on the other hand, bringing this up on screen as well, you have JLP, which is the Jupiter liquidity provider pool, which works in a very similar way. In their case, it's an index fund of Sol, ETH, Rep, BTC, USDC, USDT. That is sitting at 1.8 billion in TVL, currently also earning 36% in APY. And I feel like this is Hyperliquid, as Runelord perfectly said, tries to do so much more. Hyper EVM dApps coming. Jupiter tries to extend. We talked about recent acquisitions coming out of from that team, and the JLP vault is significantly bigger right now, 1.8 bill versus 400 mil. But it's very, very interesting to see how both of those protocols are trying to basically integrate both like vertically and horizontally and become that quote unquote on-chain Binance. And yet I feel that if I scroll through my timeline, which is obviously biased and a reflection of the content that I interact with myself, I see a bit of Hyperliquid talk, maybe a bit more. I basically don't see any kind of JLP talk at all, and it's still like mostly dominated by memes. And I think if you look at the fee side of things, it's quite obvious that in memes you have so much more capital because there's like not so much more capital, but many more people trading memes, but also the majority of them with way smaller capital stakes. But I feel that like the JLP, HLP stuff attracts capital in a more concentrated way by allowing just people to park bigger positions of USDC or whatever you want to deposit into that. And that's what I find like quite fascinating, because this is not the vocal majority. The vocal majority is talking about memes all the time, but capital is definitely flocking into both of those liquidity provider pools.
Yeah. And I think, to be honest, I think there's two reasons for that. One, a lot of people don't necessarily want to do the lazy option. The lazy option is hard to do because there's a feeling that you can't make money doing the lazy option, because you obviously can't make, you know what interest rate you're going to get when you enter those vaults, and then you have to just sit on your hands. And people will feel like they can make more money by being out there in the trenches trading stuff, like taking action, which is true, right? It's obviously more risky, but that is true. The second reason why I think you receive less of that content is because if I tell you about the vault, that means you enter the vault with size, and then the rewards are smaller. So I wouldn't be surprised if there's a little bit of gatekeeping of the information. I mean, I've seen actually prominent accounts talk about it, so it's not like it's completely gatekept. But even to the extent that if Hyperliquid, I see Overarch in the comments asking if there's going to be a second hype drop. I think the team are notorious for like not revealing all its plans, but I think I'm almost certain the tokenomics suggest like further incentives. And so, I got a drop the first time around just from having funds in the vault. Obviously, if I tell you and Legendary and Overarch and everyone else about the vault, it means my rewards are going to be less later. Now, I don't mind, because this is the point of the show. We're meant to be sharing and talking about stuff and discussing this stuff. So that's okay. But like, I think that's why maybe it's quieter on the timeline in that respect. Any final reflections, Ledge? Actually, final point, which I will lead you straight into your headline. The other thing about Hyperliquid, and we've spoken about how DEX volume has been going up significantly in comparison with centralized exchange volume. They just keep beating everyone to listing things like over and over and over again. We're going to go in to talk about Jelly now, which is a super interesting conversation. The founder of Venmo launching a token in the last 24 hours, running to 200 mil. But it's Hyperliquid who listed it on Perps like a few hours ago. Like when I was waking up, Hyperliquid listed it. Has anyone else listed it? Is anyone else awake and taking action and making sure that activity flows to their protocol? No, it's Hyperliquid every single time. So that's the other point. Yes, there's volume all the time, but they just seem to be doing things faster than everyone else, and people are noticing. So that's my assessment, leading you straight into the Jelly news. Legendary, set it up. What's going on? What do we need to know?
What a beautiful segue. Yeah, Jelly was definitely the runner of the night. I'm sharing this analysis by Token Professor on the screen. So what happened, what's the lore behind it? You have the co-founder of Venmo and Lessin, Lessin being the GP at Slow Ventures, launching Jelly. And the idea is to support creators on the Jelly app. I will get into what the Jelly app is in a bit, how it works as a content platform. This morning had more than 50K holders, with the top 10% holding 9.1%. a good amount of smart money holding in there. Price action, all-time high, went as high as 250 mil. Did pull back to 140 a couple hours ago. Now we're going back up, sitting at 160 mil market cap. And it is interesting from a marketing perspective because, again, it's launched by the Venmo co-founder, and it's a perfect marketing stunt as well to launch the Jelly app at the same time. And I think he also said that he doesn't own any of the tokens. The app in itself looks like FaceTime or very similar to FaceTime, but you can also record the conversation, share clips of them on socials, and it looks to be a token gated app. And I think the very good post I also wanted to bring up is exactly on the marketing side that says the rules to the game are changing right in front of your eyes. All of crypto, young, wealthy, educated demographic will know that an app called Jelly exists tomorrow. I mean, ultimately, the reason why we speak about the Jelly app is because the Jelly token had such a massive run. And if the Venmo co-founder would have just launched his new content platform, content app, without a token or any affiliation to that, it might have entered the Web3 Roundup because you would have thought, yeah, that's a cool news for creators, but it certainly would not be a main headline that we would be discussing in this very moment. So from that perspective, it is very, very interesting. One final remark or an additional comment on that is that also Raj from Solana commented, launching a token is like having a kid. You got to be ready. Nobody knows if you are better than yourself. It's a serious commitment, not for the lighthearted, but everyone should do it eventually. And this is also what I meant before when I said I expect this weekend to be an interesting one, because I'm not active on LinkedIn, but I am like lurking around a bit there. And I've seen the Jelly story, at least in my opinion, shared more often than other token stories recently. And even outside of LinkedIn, I feel like if the Venmo founder is launching a token that will get a lot of attention and traction, basically in his like peer group, and that is still following the Trump launch, which kind of showed that everyone is like fine to launch their own token. So I do expect this to be an interesting weekend in the trenches, and also looking further ahead from that, I definitely think that you will have more founders follow with token launches like that. I still do not think, just maybe as a final reflection, that this is the capital market of the future, and this is how fundraising is going to be done. I think we had it recently with what was the social media platform that we talked about that was sold to X? What was it?
Fine.
Vine, thank you. That was sold to X for 30 mil, and the token did run to 300 mil. So obviously, it's like very tempting to skip the whole building a company part and basically monetize straight away on a previous reputation that you have built, and B, launching a token, or in this case, at least from what it looks like, saying that the Venmo founder doesn't own any of those tokens to promote a new app. So I expect more to follow like that, and I expect, especially in this weekend, to see some interesting token launches and a good amount of trading volume on them.
Okay. Excellent summary. Good summary of some of the reaction as well. I had a fairly strong take on this, which I'll share in a bit. But just before that, just to clarify, I think you did touch on this. The founder in a video did share that, yes, it's kind of token gated. You're going to need the token for the app. So I think that's like how it's going to be used, and it's going to be integrated. I don't know if people know many more details beyond that, but that was like kind of from the founder's mouth. You're going to need it. It's going to be token gated, and then it's going to be integrated. So that's the extent of the information that we have. Maybe a slightly separate point, which is the one I was making in this post, is kind of more addressing the capital market point. And I was kind of surprised, to be perfectly honest. It was like some really prominent people just tweeting out that this is the capital markets, the internet capital markets. Like the Solana account tweeted internet capital markets. Jeremy Allaire, the CEO of Circle, just quote tweeted it and said yes. And to be honest, I was a little bit surprised that people were kind of going down that route, mainly for the reason that I don't think that it will exist in the way that it is. So when I said this tweet earlier, I said, you may not like this, but the internet capital markets is the wrong view. There are a few things happening here. I think when Trump launched his meme coin and everyone kind of thought as a consequence that anything is fair game and they can launch a coin too, right? Everyone just thinks, all right, the doors are open, everyone can do whatever they want. But I think that is definitively false. Like Trump's team disclosed clearly that their coin was a meme coin specifically. Sachs in an interview even went as far as talking about meme coins. David Sachs, the CEO, not CEO, the crypto and AI czar, when talking about the Trump coin specifically, spoke about it as a collectible. Not a view that I subscribe to. I don't see them in that way, but that gives you an idea of their thinking. And the reason why that matters is because whilst launching a pure meme coin might now be fine legally, that's, I think, what they're trying to say. Like, look, if you're launching a meme coin, that is fine. It might be a collectible. That seems to be backed up by the way they're behaving. But launching a coin as part of a raise to either recapitalize a company or capitalize a company is against the rules, even under the Trump administration. I think it's always been that way. And it continues to be that way because when they raised for World Liberty Fi, they did not raise in this way. That was for US accredited investors only, because it is not legal to raise in the US in the internet capital market. That is why it is not the internet capital market. It is, in my opinion, the illegal capital market as things stand, if the reason for that raise is to capitalize the company in some way. Now, I'm not saying that that is the case for this company in this specific instance, because, you know, their argument is that, I guess from the language that they used, is that they want to use the token and integrate it in some way into the app. So it's not a raise. And I think you said that the founder said that they don't even have any of the token. So can't be a raise if you're literally not going to have any of the token either. So I just thought it was interesting to point that out, because I think people are definitely on the bandwagon of, right, there's going to be loads of companies doing that. And I actually think a lot of companies are going to do that too. My question mark or query or thing that I hope people just think twice on is the language that they use when doing that, because I still do not think it is the case that anything goes, even though it might feel like that because the president literally just dropped a meme coin, which I understand why people feel like that. But even that presidential team themselves have distinguished in the way that they raised. They raised in one way, and when they were raising in one way, they did it via US accredited investors. And when they raised the other way, when it came to the meme coin and they have their huge supply and they obviously make a ton of money, they were very, very explicit in that this is a token that does nothing and whatever, it might be a collectible or something of that nature. So I'm just bringing that question up because I know there's a lot of excitement and a lot of momentum behind the idea of, right, this is going to be the way we now form capital. And I'm just saying, I don't think that's actually possible yet. Do I think that that means every single does that mean I think the accredited investor rules should be as stringent as they are? No, I think that they should be loosened in some way, and there should be ways for people to try to, provide capital and take a little bit of risk with the money that they've earned properly. And I think actually, things like, well, Echo is an example. It's still complying with all the rules, right? It might allow individuals to get closer to becoming VCs, but it's still in compliance with all those rules, and it's certainly not, open investment for anyone on a bonding curve. So those are my points. Those are my thoughts. Would be curious to hear your response.
Yeah, I think that is a very, very good way to look at it. I think the interesting thing also is, which I never had thought about it from that perspective, is exactly that you have the president who showed two pathways on how to launch a token. Here's how to go the utility route with World Liberty Finance, and here's how you launch a meme coin, basically. And those models can be copied by anyone in the US who wants to do that. I also think that one point in your post that you didn't mention, the PPPS, pretty sure Sachs holds Solana. That is a relevant point from the perspective that a lot of people who are trying to, share this internet capital markets narrative probably have very, very deep Solana bags. And we talked about it on the show yesterday. The more the trenches explode and the more that capital will be locked in liquidity pools, the more fees are being generated. Ultimately, it's also combating Solana's inflation. It is driving new people to Solana. It is increasing the demand for Solana. And no matter if those tokens will, go to zero or stay heroes, and most of them will go to zero, it's just a question of when. that is bullish for Solana's price action as well. So this narrative, even if you don't want to participate in the new internet capital markets, but you're quote unquote just a Solana holder, you assume that this demand for Solana will continue to explode because no, everyone wants to tokenize everything and recapitalize their old companies on chain as well, should be a nice driver for the Solana price action. If all things, if other things don't change and stay the same.
Yeah, that's what I'm thinking. I'm wondering whether, yeah, I think that's that kind of accurately summarizes that kind of additional thought. And then the other thing, I guess, I said as a conclusion as well, was, in the end, we're all here to take risk. So good luck to the people trying. I think people will definitely be pushing the law to its limits, and we'll see how the current administration responds. And in the end, I saw quite a compelling argument by some lawyers recently on the timeline, which is, although some people always talk about the laws needing to be changed and rewritten and reinterpreted for the new stuff, sometimes it might be enough for there just to be a change in administration to read them in a different way. Look, I don't know if that's the specific case here, but in the end, this happens in all organizations where you have a set of rules that are laid down. In the end, if you don't enforce them in the way that in a strict way, then they might as well not be there, right? So I wonder, like, we'll just have to see. Like, these rules have existed for a long time, the investor protection rules. Will they be enforced in the way that people might expect, or that certainly that they have been enforced previously? That's the question. We'll see. I think they will be, to be honest. I know everyone. I don't know. I think people in crypto think it's just going to be like a free fall. I actually don't. I do not think it will be, and I think the administration almost showed that. So, look, you want to do meme coin and have fun, do that. If you want to do the raise thing, then do that properly. I don't know. That's my instinct. But unless you've got a final thought there, Ledge, I think maybe let's move on to the next one.
Happy to move on to the next piece of news.
Let's do it. So the next headline, I thought this was kind of an interesting one. Don't really talk much about DeSci, but it was kind of a significant amount of money, I thought. So I thought it would be an interesting headline. This is the news that the SEI Foundation has launched Sapien Capital, a $65 million venture fund to back DeSci startups building on its layer one SEI blockchain. The foundation has fully committed $65 million capital for the fund, but it may work with external investors or limited partners in the future. Interestingly, the fund is not an ecosystem fund and will not offer grants. Instead, it will make venture investments in both tokens and equity of DeSci startups, with check sizes ranging from 100K to 2 mil. The reason why I thought that was interesting is because, oftentimes a lot of these chains are offering grants, just like come and do stuff with us, and you just basically get paid for it. It seems like there's a bit of a shift, and I know this is not the only foundation doing this. It's like, no, we're not just giving you money to do this stuff. Like, we're going to take a stake in you, and if we're going to give you the money, then we're going to become profitable as a consequence. So I think that is an interesting distinction. I think it's also interesting in the sense that DeSci must be investable. I know there was a lot of FUD around it at the beginning, and some was justified, including for myself, to be honest, as some of the experiments people were claiming to do via different market cap unlocks appeared to me to be pretty irresponsible. But there must be some life here for people to think it is worth pursuing. The general, if you zoom out a touch, like the reason why people think this is interesting is because DeSci is viewed as a way to expand access to scientific research funding, enable open data sharing, and ensure fair compensation for scientists. Unlike traditional research institutions where centralized entities kind of control the funding, the distribution, DeSci is supposed to be able to shift power to decentralized communities. And as I said, I think there's been a lot of question marks around that up to this point. Whether that's possible to be done in a proper way, I don't know if we've had any outstanding examples of that being done yet, although I'd be open to being proved wrong. I'd need to see some concrete examples of it working well. On a chain level, I found it interesting because I guess a lot of chains and L2s are looking for a niche. Like Abstract is going for consumer and entertainment. Mode is really going after AI agents, for example. And I think chains are looking for an angle to make an impact in some way. And, I think SEI obviously doing a bunch of other stuff too, but it's an example of someone saying, let's go in this particular direction. Maybe we can make an impact there, rather than just jumping on the same bandwagon as other people, or focusing in a more general, having a more general approach. That's the breakdown. Ledge, be curious to hear what you think about DeSci more generally and Say's direction here.
Yeah, starting with Say's direction first, I think it's just an experiment to also see if the venture model is better suited to align interests, as opposed to the grant model. I mean, with grants, we've seen different attempts to do them in the space. We've seen, obviously, here's the grant first, and go out and do your thing, which is typically how basically all of the DAOs worked initially. Then we've seen Optimism, for example, with retroactive grants. Here's basically start doing something first, and then you will get rewarded for that retroactively, which works for some industries but doesn't work for others. Obviously, if you are in science and you want to set up certain experiments, you will have upfront costs. Funding is or has always been an issue in science. You typically can't be like, I have 100 million, I'm going to run the experiments myself, and then I'm going to find someone to retroactively invest in me and basically sponsor or invest or grant me the money that I've used. So you need the money upfront to be able to set that up, which then would lead you back to the typical grant. But with the grants, then again, you have the thing that they're not like perfect to align incentives. And by taking a stake in the company, that ultimately makes you have skin in the game in that company, might be the better way to align incentives. So that's on the strategic side for Say, why I understand why they want to do it in this way and not just go for grants.
I mean, I definitely agree with that part. Like, I think maybe there's been a bit of fatigue from projects funding teams, and I don't know how successful these things go, but there's definitely been examples of, I don't know, take, Polygon, for example, funding huge teams, and it seemed like these contracts like last a year and then they disappear, and then the teams drop off. But it's not just them, right? Like, you have teams that are incentivized to build with a particular chain for a particular period, and then when that period finishes, there's kind of no longer term alignment for them to stay with the chain. And now that there's so many chains and so many people competing, I think there was a bit of chain hopping going on, where people could just go wherever. It's like, well, look, if you're going to do that, then fine, you can go, but we've still got a stake in you. So if you go and be successful somewhere else, then we're going to see part of that value. So I actually think that aspect of it makes a lot of sense. On the DeSci part in general, though, Legendary, what are you thinking here? Like, is this a viable thing? Have you seen enough of it? Any particular thoughts?
I like it. I honestly like it quite a lot. Like, I mean, I'm brought up in a family of scientists, so I know more like from my mother's perspective on the funding side, and how much red tape there can be involved, and how political the funding game for research can get. Then obviously not only from the regulatory side, from the European Union, from a government level, then you also have the company level, the pharma companies who also typically want to foster research in the domains that help them advance whatever they want to sell, what they are working on. So it is a very, very political game. And I feel like that layer kind of gets removed in crypto, because in crypto it becomes more of a gambling layer. It's like, we throw money at it if that was how DeSci started. We think the experiments are cool and they could be something. That's like the retail component of that. But then again, I think that from the venture perspective, if there's just another angle coming in and it is decentralized science, and then you have blockchains trying to invest in companies, of course there's going to be politics involved in that as well. I'm not going to say that's not the case, but I just think that it's per se a net positive that there's like a new funding angle for research, for scientific research.
Fair enough. Like, I definitely probably agree with that final point. I think it's littered with issues and troubles. Is it good that there is an alternative avenue for funding? I think that statement in itself makes sense. But man, I think there's all kinds of issues that they would need to work through. And I guess that's why there's so much red tape, because how do you determine what gets funded? if you can just go direct to people to do whatever kind of scientific stuff that you want, I think there's all kinds of questions to raise, which we probably don't have time for today because we just have 3 to 4 minutes left, and I want to get into the final headline ledge. It's not a super long one. We just wanted to bring people up to speed on the next Trump family, the Trump Corporation move, which I think will be interesting to note.
Yeah, there's a good post by Eric Balkunas that basically summarizes everything we need to know on that. Trump media is expanding into financial services and looking to create America First investment vehicles, also going to invest 250 mil from cash reserves into funds, ETFs, cryptos, custody at Charles Schwab. Eric Balkunas continues to say, don't know much else yet. DJT, the stock up 15% on that news. That is basically all there is to say on that. I think, again, to repeat, the important part for our industry is that there's potentially going to be an allocation to cryptocurrencies as well. And the starting point is those 250 mil that we just mentioned previously. Stock markets also like the news.
Interesting point. And I guess it's an additional example of the Trump set of corporations extending its influence and kind of surface area to crypto, right? You have the meme coin on the one hand, you have World Liberty Fi, the corporation, the DeFi aspect, and maybe you have a more institutional banking arm which has exposure. So there's like various touch points now to crypto, kind of touching different types of people, I guess, which they have tried to offer and, I guess be able to make money from as well. Interesting to note. That is the show for today. I hope that was as interesting as always. Just a reminder, guys, we do this every single day, Monday to Friday at 7 a.m. Eastern time in the morning for 1 hour. We're available on Twitter, X Video, YouTube, and Apple and Spotify podcasts as well, if that's how you prefer to catch up on your content. Thank you so much for joining us. As always, thank you to Legendary for co-hosting with me, and hope you have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.